On the last trading session of Friday, gold spot printed a closing price little above $1,811 per ounce. The number is rounded and the market is closed. And on the last week, gold traded as low as $1,791 per ounce and as high as $1,833 per ounce. The numbers are rounded and the market is closed. Gold is trading, we can say, still in a correction. We are above all the daily simple moving averages and only below the 50 days daily simple moving average. The relative strength index readings are moderate on all the charts, pointing to let's say somehow equilibrium in the market. The supports at 1804, then 1789, then 1750, and the resistance levels at 1823. If we can go from there, 1835, then 1860. That's all. Moving now to the economic calendar. On the economic calendar for the coming week and from the United States, we are waiting for the following economic headers to be released. The building permits for month of June due on Tuesday, then the existing home sales for month of June also due on Thursday, and the manufacturing PMI and services PMI on Friday. That's all. Moving now to the trading strategy. Hi again, it's always nice to meet you in a new episode of our gold price weekly forecast. Gold today. In our last video and the last week, we talked about how do we expect gold market to behave. We said as long as we have had this close above 1798 on the last week, it's most likely that gold is going to move to the upside, maybe with $1,840 to $1,860 per ounce. Now gold moved up as expected. We have seen gold moving toward $1,835 per ounce, little below this level, which is the 50 days daily simple moving average is located at this level. Then the gold market turned around and started to sell off. The sell-off wasn't in gold market in particular. The sell-off was abroad and so many other markets. Crude oil sold off. We got also the stocks market even in Europe, in the United States. The three major indices sold off, so it looked like a major pullback or a major correction, something like that. So now all the markets are under the mercy of the US dollar. Now looking at the chart of the the US dollar is in a place where you cannot judge simply, okay, what is going to happen next, because this level is the, let's say, supply level. Whenever the US dollar comes to this range, usually it sells off and goes down all the way to 90. But if a breakout happens from here, the US dollar will easily go to 95 or 96, and this will collapse the gold market. So I don't want to judge this. I want to wait and see what the US dollar is going to do, and I will follow that move. Into gold, gold is held to the upside, as I said in my last video, about $1,789. This level is highly important. Now on Monday, look for a sell at around 1820 with a stop loss about 1823.24, and look to buy about 1804 with a stop loss below 1798. This is a time that you don't need to take a position immediately. As I said, you have to wait and see what the US dollar is going to do. There was a sell-off in the stocks, in gold, in oil, in silver. Silver collapsed. So we don't know if this is a pullback, like what have been happening into these markets all the time. Okay, they are just like selling off like 2-3%, then they rally another 5 to 7%, or it is a start of a correction. This is what we are going to understand on the coming week. So as I said, gold could be a sell from 1820 and a buy from 1804. This is on Monday, and with us on Monday we'll put the video tell you what we are expect after we see how the US dollar is going to behave on the first trading session of the week. Also, you are advised to join us on our brand new website www.goldcoachy.com. You will find so many helpful material that will help you trade this market and other markets. Thank you guys for watching. Please share, like, and subscribe, and I will see you hopefully on Monday another